there's two big challenges in the cannabis space today, wherever you are, particularly on the East Coast, New York, New Jersey, and that's financing and real estate. As Tony Soprano said, God ain't making any more land, and trying to find in either state, either New Jersey, anywhere, or certainly downstate New York, properly zoned, compliant real estate to operate your dispensary or cultivation and manufacturing facility is very, very, very challenging. There's just not a lot of viable real estate left to locate. And so we have, I think now 1,700 conditional license holders in the state of New Jersey who are just looking for viable real estate to locate. Each town has the option of opting in. I think only 17% in the entire state have opted in. New Jersey is a rather particular state. I think there's 565 townships in the state, which is more than California. So there's a lot of particular small regulations among each that present its challenges. New York, similarly, particularly again, if you want to look downstate, very, very hard. For example, if you're a typical commercial enterprise, you want to be on the ground floor in New York City, that building is probably financed, apartments above, and most lenders have covenants in the loan documents that prevent the landlord from leasing the space to anyone who's violating local, state, or federal law. Of course, cannabis is still federally illegal. So you could have a compliant landlord, you can have found the perfect space, it's far from a school and any kind of child activities, it's you're a pizza shop for convenience, but unfortunately there's this covenant in the loan documents that might impact upon the landlord's ability to lease it to you. And then financing, similarly, because of the federal prohibition, your traditional commercial lenders, nationally chartered banks can't lend in the cannabis space. And so it's very, very, very difficult to secure that financing. It usually has to be done privately. And turnkey operation for a dispensary can be as much as $1 million. It's a very expensive undertaking to get the security in place, to get the product in place, to do your build out. Particularly if you're going to be in the medical space, you have to have HIPAA compliant POS. Your architects, your engineers, there's just a lot of work that needs to be done, and it's very, very, very expensive. A lot of folks that I talk to have either experienced out west or they know someone who did it out west for a third of the price. But of course, everything is a lot less expensive in Colorado than it is New Jersey. Your labor costs, your material, New York as well, your labor costs, your material, your price per square foot. So it's just a much, much more expensive undertaking. And when you have to self-finance, you can't, again, secure traditional commercial lending. It's a very, very big challenge. There was recently an act in the Senate, the Safe Banking Act, that looked like it might push through even in the House, but then of course the House fell apart. And so we're probably now years away from that coming on board.